Good afternoon and welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Meghan Grebner. With us is University of Missouri livestock analyst Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
Happy Friday to you. As we get into the markets this week, let's start first and talk a little bit about what happened and some of the movements and changes that we've seen on the livestock side of things this week.
Yeah, when you look at feeder cattle prices, we have been up for the week, Meghan. You know, feeder steers and heifers steady to 6 higher. If we look at the demand there, it's been fairly strong. I think that has a lot to do with some of the better feedlot margins that we've seen of late. Cash hog prices continue to move higher. Another week where we're up about $3 relative to where we started the week. I think by and large, some of the strength in the hog market continues to emanate from what's been higher pork cutout values. And when you look at what's been driving that, pork belly prices have certainly been important as we continue to remind ourselves that we're fairly short on belly stocks relative to what we got measured last December. The choice beef cutout was down for the week slightly. So a little bit of mixed bag on the wholesale side, but all in all, maybe not a bad week for cash markets at least.
Let's talk a little bit. WASDE report came out yesterday. Any big surprises, or was it really kind of a snooze?
Yeah, so I think when we look at what came from USDA, not maybe a lot of big changes from, and I'll talk about it from a meat perspective here. When you look at the S&U for beef or pork, either one, not a lot of changes from USDA relative to the January report. Yet they have seen some revision in prices from the report. If you looked back in December of 2016, for example, they would have said barrel and gilt prices were going to average $40 for 2017. They've now revised that to where they're at $43.50 for 2017, so up $3.50 since where they were back in December. Again, much of that I would say is underlying strength in demand, as really the supply side hadn't changed. And same for cattle, where they were saying $1.07 for fed cattle in December of 16, they're now saying $1.12.5. All of those things maybe suggest that either demand's getting stronger, or they recognize demand's getting stronger, or perhaps packer margins narrowing a little bit as well.
Scott, another report that came out from USDA this week was kind of depressing when you looked at it, quite frankly. USDA released their farm income and another year of projected tight margins, which is not anything that we didn't expect, but another drop in those numbers from USDA.
Yeah, so a $6 billion decline projected by USDA for 2017 farm income relative to 2016. And when you realize that, you know, it wasn't that long ago, 2013, where we hit a peak of almost $124 billion, you know, we're roughly sitting at half the levels we were just a few years ago. That's not very much fun, but I'll say back in 2013, it was pretty easy to see some positive returns across the board. And now we're sitting here where it's back to a much tougher situation. I always remind producers this is the time to work on the cost side of the equation. We probably can't control prices that we receive for our products that much, but we can work on those cost components. Troubling for me out of the information USDA provided us, so beef cattle receipts down nearly $4 billion in 2017 relative to 2016. And I know we already had a lot of folks in 2016 who were pretty financially stressed. So it tells me we're not done in terms of the cattle side. Even on the pork side, down $1 billion in 2017 relative to 2016. All of those things tell me that it could be another tough year meat market-wise for cattle and hog folks, at least as measured by USDA in these farm income estimates.
There were some sections of that report that were flat, though, correct? So are we seeing maybe a bottom, or are we hoping maybe that this is the bottom and we can start to either maintain for a little bit or start to move up?
Yeah, so I think it's important to remind ourselves, all right, so net farm income versus net cash income. Net farm income includes value of inventory change. And when we look at it, and that's the net farm income is the one that's down about $6 billion. If we look at net cash income as reported or as expected by USDA, up a little shy of $2 billion. So maybe from a cash farm income standpoint, we're in a little better shape, and we are nearing the bottom. I wish my crystal ball was perfectly clear on this, but we're getting in a situation where everyone's seeing extremely tight margins. I don't think you can really look at a sector of agriculture today and say 2017 looks very bright relative to where we were a few years ago. And so hopefully we're getting towards the bottom, and we can talk about some higher estimates as we move forward.
Scott, let's talk a little bit about trades. And trade data was released this week, and man, those numbers sure look nice for our nation's livestock producers.
Yeah, so we ended 2016 really on fire when you look across the board on the export side of things. We were up 30% on beef shipments in December relative to a year ago. Pork up 15%. Chicken also posted some strong gains, being up 28% relative to a year ago. So, I think many of us were seeing those stronger prices in the latter part of 2016, kind of wondering what the demand side looked like. And I think the report we got this week just reminded us that exports maybe carried us at the end of the day when we went out of 2016. And it's really across the board, very good strength. Now, I'll remind us we're expanding domestic supplies of all three of those products as well. So when you look at the percentage of our production that we're exporting, we're not growing a lot there. So we have more room as we look at 2017.
While we're on the topic of trade, Scott, as we look to the administration and some of the actions that have been going on, the Japanese Prime Minister is meeting with President Trump this weekend. There's been so much talk about getting back into NAFTA. How nervous does that make how nervous should the livestock industry be if we look at taking away some pretty strong markets for U.S. beef and pork exports, and poultry too?
Yeah, so I think when you look at Mexico in particular, for me, it's a market we need to be strong in 2017. And if we talk about tariffs being put on products, our products going into Mexico, I have a tough time thinking that we're going to talk about additional exports heading to Mexico this year. And you're right across the board. You can look at both beef and pork and go, Mexico's at least top three in both of those, and number one in pork. So we really need that market. And as we hear much of the trade discussion that's going on and the renegotiation discussion that's going on, for me, the NAFTA agreement is the one that's most worrisome for me in 2017. We're already trading a lot of product there. When I think about TPP, for example, and that renegotiation process, that's much longer term in terms of what we need there. So important, absolutely, but maybe isn't going to be what affects markets in 2017 yet. The trade to the south is going to be very critical. So I worry when we have expanding domestic meat supplies in excess of 3% again in 2017. If Mexico were to change dramatically in terms of what they take from us, that might be enough to tip what's a pretty fine balance right now to the negative for pork and cattle producers.
We talk a lot about that TPP being a long-term goal to have long-term implications. When we talk about NAFTA, I'm assuming that could be a pretty drastic and quick change in markets as well.
Yeah, here and now, and so it's a market that we've been developing over time, and I remind us that we've been very competitive. Number one, they're very close to us, so from a transportation standpoint, it's been an easy market for us. But again, if you talk about putting potentially tariffs on products going into Mexico, then I think we can find other countries more than happy to provide product into Mexico. You can look to South America as filling some of those markets probably relatively easily. So, and once we lose those markets, it seems to take a long time to develop markets, yet we could lose them relatively quickly, and then getting them redeveloped just does not occur overnight. I think we could look back to the effects of BSE to the U.S. beef industry and recognize that it takes years to get reestablished in some of those markets, as our competitors are more than happy to sometimes fill the gap that we might leave along the way.
Scott, as we talk about trade, we talk about demand. Let's talk a little bit about the consumer side of things. Consumer confidence came out. Are any big surprises in that report, and how does that lend to demand for our products here domestically?
Yeah, so we did get February consumer confidence out as well this week. It was down 3 points relative to January, but I remind us January was near all-time high in terms of consumer confidence. So coming off of that is, I think the February number might still be one of the top 5 we've seen in quite a while. So it is positive. I think many of the things we're seeing on the domestic economy side are helpful. And it is a combination of domestic demand and export demand that has kept prices higher. I just remind us, right, so expectations. When we look at the expectations side, we're off about 5 points in February relative to January. We need the economy to continue to be strong in all of 2017, and we don't need to slide back down that hill in terms of domestic demand. And if we do, I think it again could make things tough. And you take the combination of potentially weaker domestic demand and then some problems with export markets, and you can tell a pretty bleak story quickly.
We talk about consumer confidence, producer sentiment. Purdue and CME Group released their ag economy barometer this week, and really another big jump and another really strong feeling from producers around the country. Is that surprising as you look at that compared to, and when we talk about the economic situation we're facing now and through the rest of the year?
It's a little bit surprising to me that we've seen such a strong overall index from those Purdue numbers. It seems to me there's still a lot of financial issues, at least for a portion of our producers and across a number of segments of agriculture. So we'll see if that continues. I noticed as you looked at the results from that survey, certainly when you got into do people expect to be financially better off a year from now, you didn't see any real strong signal that was what they expected. So perhaps as we get out of winter, we've seen some growth in the stock market continue to unfold. We have seen generally some higher prices as we've gone through the last 60 to 90 days across the board. Maybe that has made some folks be a little more optimistic than when we were in the very much free fall for a lot of these markets through early mid 2016. So we'll wait and see how that continues to unfold. But I don't think we're out of the woods yet in terms of some of the financial issues that are coming.
Scott, anything else this week?
I think we've covered a majority of what we've got out this week. Again, it's nice to be talking about higher prices when we have 3% growth in domestic supplies coming in 2017. So it's nice that we are seeing some price strength across the board.
And anything to keep our eyes on next week?
Yeah, so we will see USDA give us their long-term projection. They'll be holding their big annual conference in D.C. at the latter part of next week. We'll also get a little bit of information about numbers of farms and land-in farms next year from NASS folks, and a little look at retail prices as well next week. So those are the reports we'll be seeing and affecting us next week.
All right. Have a great weekend, and we will talk to you next Friday.
Happy Valentine's Day. I hope you go have a good steak on Valentine's Day just to keep beef prices higher.
Well, you know, you can, if you put your steaks together, you can make like a little heart of meat or meat.
There we go. More meat is better at this point, Megan.
Say I love you with red meat.
There you go.
All right, Scott, we will talk to you next Friday. To have our weekly livestock market update delivered to your email box every Saturday, go to our website, brownfieldagnews.com. Click on subscribe. You can also send Scott and myself some questions or comments if you have them. That's it. Scott said it for us. Have a happy Valentine's Day. We'll talk to you next Friday. I'm Megan Grebner on Brownfield.